It is true that retail investors are buying Bitcoin ETFs. That's great. This is one of the best, cheapest ways to get exposure to Bitcoin that exists. It's very familiar, particularly to older generations who are more used to brokerage accounts than they are to wallets or apps. Great. But that doesn't mean that institutions aren't buying them as well. I think flows are going to reaccelerate in Q4, and I think flows in 2025 will be higher than 2024. I also think more than Bitcoin, Ethereum is wrestling with this election uncertainty.
Mm.
Bitcoin has kind of gotten through the regulatory hurdle. There's not much that regulators can do to harm Bitcoin. There's still uncertainty on ETH. Remember, the SEC and the CFTC have different views.
Market analysts suggest this may be the final opportunity to buy Bitcoin at a dip before its next upward surge. After months of decline, Bitcoin could be set for a 3-month rally, with some experts forecasting a potential breakout above $92,000. Based on historical post-halving patterns, Bitcoin appears to be on the verge of a sustained rally. Recently, Bitcoin, currently trading at $58,825, retested a crucial support level on its weekly chart. This move, according to the well-known analyst Titan of Crypto, could pave the way for a rise above $90,000. In addition to these technical insights, Bitwise CEO Matt Hougan predicts a Bitcoin bull market driven by Europe's clear regulations and growing institutional investment. He forecast a strong resulting end to 2024 alongside increased Bitcoin ETF acceptance. This suggests that sustainable solutions can harness cryptocurrencies' economic benefits while mitigating environmental drawbacks and ensuring a stable energy supply. Matt Hougan stated that the European market clarifies Bitcoin legislation, which benefits businesses. He pointed out that unlike the hazy US market, Europe has guidelines that allow certain crypto assets to be listed as exchange-traded products, ETPs. Hougan announced Bitwise's acquisition of Osprey's Bitcoin fund, which they want to merge into their Bitcoin ETF, expecting cheaper costs and continuity. We will now bring you clips from Matt Hougan's interview. This is an important video you do not want to miss. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy.
With regards to the European market, you mentioned there's staking, so there's a lot more clarity there. There's a lot more products, right?
It's such a relief. It's unbelievable to go from this, hazy US regulatory market into Europe, where there are clearly things you can do and clearly things that you cannot do, right? There are certain crypto assets that you can't list ETPs on, but there are a wide variety that you can. And just knowing that that's possible and knowing that the regulators will work with you is a tremendous relief. So whether that's in Switzerland, which is a booming crypto market, or the EU, where ETC Group has sort of pioneered access through Xetra in Germany, it is really wonderful to operate with a little bit more regulatory clarity. I hope it's a taste of what's coming here in the US. And if it is, I can tell you that it tastes pretty good.
For sure. Now, the other acquisition was Osprey's Bitcoin fund, right? Tell us about that.
Yeah, absolutely. So Osprey had a private Bitcoin fund, OBTC, and we're in the process of bringing that into our Bitcoin ETF. Assuming it's successful, it will be, it would be just a win-win. I think it should lower costs. It should provide continuity. Look, we think the crypto market is entering another major bull market period. I know it doesn't feel like that right now. We're all, sad about September. We've been chopping sideways since March. People are worried about the political outcome. But from our point of view, the sort of 4-year cycle is still intact. There's a lot to be excited about in crypto. Now is the time, to stake your position and grow aggressively. And that's what you're seeing from Bitwise in those acquisitions. It's also what you're seeing in our sort of distribution strategies on our core products. And we're really excited for the next, couple years and what it will mean for Bitwise and for the industry. From my perspective, the thing that markets hate more than anything else is uncertainty. And we've been dealing around huge uncertainty around the direction and timing of Fed rate cuts. I know we're all now in this 25 or 50 basis point camp, and rate cuts are a fait accompli. But it wasn't that long ago that we were wondering when Powell and company would decide it's time to move into rate cuts. And it wasn't that long ago that Fed governors were speculating on rates going up another 25 basis points. So the resolution of uncertainty around rate cuts and the scope of those rate cuts, and then the resolution of uncertainty around the election. Again, I know people are like worried, Trump, Harris, what will it mean, etc. But from my perspective, actually, resolution of uncertainty is the most important factor. So we think those things are going to coalesce. You also have rising global liquidity from central banks. That has started to change. I think we're set up for a very strong Q4, particularly as we get toward the November election and beyond. The challenge with the argument they were making, they were trying to say there isn't institutional adoption of these ETFs because mostly these ETFs are owned by retail investors. The point I was making was even if you excluded all the retail money that came in and just looked at the institutional money, they would be the most successful ETFs of all time by a huge factor. So, it is true that retail investors are buying Bitcoin ETFs. That's great. This is one of the best, cheapest ways to get exposure to Bitcoin that exists. It's very familiar, particularly to older generations who are more used to brokerage accounts than they are to wallets or apps. Great. But that doesn't mean that institutions aren't buying them as well. I come from an ETF background. The thing I love about ETFs is that little old me can own the same exact product as the Harvard endowment. And we can both own it for our own reasons, getting the same deal. That's all that's happening here. My, father is buying the ETF and the state of Wisconsin is buying the ETF.
Right.
And that's the rising tide. And I think flows are going to reaccelerate in Q4. And I think flows in 2025 will be higher than 2024.
Matt Hougan remarked that he preferred the Ethereum ETF to launch in 2025 as professional investors are still becoming acquainted with Bitcoin. He added that the ETFs have been effective, with a few $100 million in assets, but will grow over time. He further points out that Ethereum is more vulnerable to election uncertainty because of regulatory exposure and contrasting views between the SEC and CFTC. Matt Hougan also believes Ethereum's surge will be postponed until after the election. He affirms that the ETF era of cryptocurrency has begun, but that growth will necessitate regulatory modifications. He favors the concept of ETFs for meme currencies, allowing investors to access them safely and securely. Matt Hougan is especially excited about tokenized products, which serve the crypto-native business and may eventually converge with traditional markets. Let's return to Matt Hougan's interview, where he reveals more insights into Ethereum ETFs and tokenized assets.
I think I said that I would rather the ETF for ETH launched later. I think it would have been more successful if it launched in 2025, just because the investors we talk to who are professional investors are still getting their hands around Bitcoin. Right. I know that sounds goofy to people on this podcast, right? Because the idea that you're still getting your hands around Bitcoin, but that's where most people are. They're going 0 to 1. And then to complicate the story and talk to them about, Turing complete blockchains and applications built on blockchain, it's just a lot. So these ETFs have actually been pretty successful from my perspective. We have a couple $100 million in our ETF. That's a top, 2 or 3% ETF launch. That's pretty good. We'll take it. But I think they will build over time. I also think more than Bitcoin, Ethereum is wrestling with this election uncertainty. Bitcoin has kind of gotten through the regulatory hurdle. There's not much that regulators can do to harm Bitcoin. There's still uncertainty on ETH. Remember, the SEC and the CFTC have different views. DeFi and other ecosystems built around Ethereum have a great deal of regulatory exposure. So I think I'd be surprised to see ETH rally until we get sort of to the election or beyond and we see what the Harris campaign positions itself on crypto. I just think there's more uncertainty in that market. We've entered the ETF era of crypto. It's much harder to go from 0 to 1 than it is to go from 1 to 100 in anything, but also in ETFs. It's going to take regulatory changes, maybe changes in the direction of how the SEC thinks about this market. But there are a number of robust assets that deserve ETPs, in my view. In Europe, you see these ETPs helping investors get safe, low-cost exposure to these assets. I think we're going to get there in the US.
Maybe meme coins might have a turn.
Yeah, that's an interesting question. I don't know if they fit into the Bitwise framework of the world, but I will say that, if you look at the broader ETF ecosystem, there are lots of ETFs that just exist as trading tools and are widely adopted and widely used. And if you can sort of answer this from two different viewpoints, right? You can have the fundamental critique of meme coins, but whatever, people want exposure to them.
Yeah.
Why not let them get exposure to them in a safe, secure, familiar ETF package where custody is handled and trading is understood and all of these things? I think, broadly speaking, I think that would be great. I don't know that Bitwise is going to be in that game, but I would be supportive of these ETFs existing. People are going to find exposure to these things one way or the other, and I would rather they do it on an ETF than they do it on FTX. Like that's just a positive trade for society. So, we'll look at it, we'll think about it, we'll see how that develops. My view on those tokenized products, really exciting, is that those are serving a crypto native industry. Those are serving people who are actually crypto native but need fund exposure. Like they're serving hedge funds who want to monetize their cash over the weekend. They're serving other crypto traders that are crypto native. So I actually think the demand for these tokenized products for the next 2 years plus is going to come from crypto and not from traditional investors. And I think that's great. So I'm very bullish on that space. I'll have to think about whether it makes sense to package those in ETFs. But I do think there's going to be a convergence between these tokenized real world asset products and the traditional markets. I think the demand is coming from crypto, not from the traditional markets, and therefore it's fine to be in a crypto native package.
September has historically been Bitcoin's toughest month, with an average return of minus 4.69%, making it the most bearish period for the cryptocurrency, according to CoinGlass data. Yet, after weathering September's slump, Bitcoin tends to surge over the following 3 months. On average, October brings a 22.9% gain. November jumps by 46.8%, traditionally the second best month for Bitcoin, and December adds another 5.4%. In the halving year of 2020, Bitcoin skyrocketed over 27% in October and more than 42% in November, kicking off a 6-month rally that extended into March 2021. This current market correction might be the last window to buy Bitcoin at a discount before its next explosive rise, says popular crypto trader Mags. In a September 15th post on X, Mags remarked, "Bitcoin gives 3 chances to buy before it goes parabolic. The last is right after the halving. This could be your last chance to buy Bitcoin cheap before it goes parabolic." Adding to the bullish outlook, pseudonymous on-chain analyst Checkmate highlighted that Bitcoin's current positioning mirrors its setup during the last 2 bull markets. In a September 14th post on X, he wrote, "Bitcoin is in the exact same spot as the last 2 cycles since the low. I prefer the cycle low comparison as it reflects the psychological recovery investors need after a bear market. However, Bitcoin's current anxiety stage could spell more short-term downside in September, with the next leg up potentially triggered by the upcoming Federal Reserve meeting on September 18th. What are your thoughts on Matt Hougan's interview? Do you prefer to invest in Bitcoin ETFs or Bitcoin itself? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.